The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. That is the Tiger Technicians Hour for Monday, the 11th of February. And my pleasure to be here again. I was actually in for the last hour, sitting in for Tom and Steve. My pleasure to do that. And we were looking at different charts, discussing, actually for those who are not familiar with my technique, in that particular hour, I just showed the core of the ChapmanWave going from a trough to at least a peak D, etc. So what I'm going to do, following up in this, I've got other questions here, a couple of questions in the den about stocks that they'd like to look at, and another email, and I'll go through those. So we have programs coming up all day, all the way through to 6 o'clock, and then they get archived 24 hours a day. It's just amazing. So straight after this show, you've got Larry Pesavento, then you've got Daryl Martin, you've got Dave White, you've got Ken Shreve, you've got Tom O'Brien back here at 4 o'clock till 6. Hey, fabulous programs all through the day. 9 to 10 this morning was Tom O'Brien. So we have a full house. I would like very much just to take a moment here to talk about something, two things. Number one is I had a Master Trader Series class on Saturday. It's called Level 2. It's a review of previous chart patterns that have been discussed and gone over and understood and used in practice. And then it's a look at chart patterns that have variations. And what I always say is, if you, let's say, you do some woodwork and you're just beginning. Well, let's face it, after about the fourth or fifth time, you really get those angles very good. And you get the different joints. You get better and better. But by the time it's your third or your fifth or your 10th or the 15th year, you have techniques that are iterations, maybe the 6th or 7th iteration of a particular idea that you had. Well, those are the variations. But the core was that you're going to chisel, right? How you chisel and all the other things, you might wet, you might not wet, you might use oil, you might, whatever it is. Those are the things you learn from experience. And basically what we were looking at is that when you get to a peak D, what can happen? That was number one. We were talking about this aberration. We actually spent more time than I should have on this aberration, but we need to clarify exactly what it was, that the sudden emotional sell-off on the 25th of February. But essentially what we're looking at here is the chart pattern that I talked about since 2004. Actually, I'd spoken about it before, but it's 10 years that I've been here. End of 2004, going to 2005, I spoke about a pattern that I used only for the Dow, and a pattern that occurred very infrequently. But if you could identify it as it was happening, it was just an extraordinary piece of information. It can give you a powerful, powerful percentage gain if you can recognize it. So we are fortunate because a week ago from today, that was Monday morning, we went long the Dow. Basically, we went along the 200% down my opening calls, my daily service, my trader's corner. And the only reason was that I was recognizing this pattern. I said, this has to be peak A. The A that formed on the 28th of February in the Dow at 14,149.15, and the low that was made the next day, essentially closing above the 9-period exponential moving average. If I draw a vertical line, let me put it in right there. Look what we've got. If you're looking at Tiger TV, the chart on the left is the daily. The chart over here is the weekly. The chart on the right is the monthly. I want to see every time frame in a single. Look at that. I haven't finished the notation here. I've done it about 10 times in other charts, so it isn't done here. But if we can go, if the Dow goes above 14,413.17, goes to 18, even 1 penny, that will be that leg D that I'm anticipating in the 120-minute chart. And then I think we're going to take a timeout. It means that the more times we make higher highs on each bar, the longer it takes to get to that requisite peak D. And exquisite, I should say, but it's a requisite. It's a requirement of the ChapmanWave buy mode. Now look at this. From that level, you had the stochastic screaming up to the 65 or 63% level, that red line. You had the MACD, fast moving average, squeezing from the low towards that red line, the 9-period moving average, 12 period moving average. And that's the slow moving average. And at the same time, what did you have? You had a confirmation. The moment you broke above that chart by 1 penny, 14,149.16, that B was taking place. So we were lucky we got along right there. I believe that last week was the first. What's today? Today's 11th. Wait, what was Monday? What was Monday? We got along Monday. I don't want to talk out of turn. DDM long at 81.87. Star small long. So that was the date. Give me a date. Why is the date not there? Oh, the 5th. So on the 4th. On the 4th we started it. So let me just double check here. That was the 4th. Okay. We hadn't yet. Because the bar that pulled back held the 9-period moving average that morning, the next morning I wanted to go along. We got along just off the bottom. We got along at equivalent of Dow 14.30 was a low. We got along at about 14, maybe 35, 40, something like that. So all I'm saying is that there are patterns that repeat over and over, and if you can recognize them, go with them. You've got to go with them. And then you just put your stops and say, if I'm wrong, this is what's going to happen. So here we are. I can't remember now if I went through the numbers in this hour. No, I haven't gone through the numbers. The Dow is up 11 at 14,409. The S&P is down 2, up 2 or down 2. I can't make it out. The S&P is unch at 1551. The comp index is down 4 at 3239. We've got gold up 2 at 1578. Oh, I said in the last hour I'd look at the charts. I'll look at it in this hour. I don't think there's a big rush to look at the charts. I do think they're going to go from an H to an M pattern. They're going to be bounces, and I'm treating them just as arch formations, but no big change of trend, which is down. But I do see a pretty nice move to the upside starting sometime this week in gold. Silver is down 10 cents at 28.85. Platinum's down 3. You got copper now. It's up 5 cents. Thank goodness. At 350.95, 3.50. And you've got bonds up 3 ticks at 141.03. So let me just go through my scenario. I believe that this week we start the very choppy pattern, but within a fairly tight range that takes us to slightly higher highs. I didn't do this during the other hour on the white chart, but I did it on the black chart. But I will show you. This trend line here is really, did I do it? Yeah, this trend line is very important. It says that if the Dow gets into the 14,490 to 14,560 area, that is an inside track, and that would be the resistance area that I'm looking at that I suspect is going to repel the price. And we are at now 14,409. We need, what do we need? We need 5 points. We need 5 points, and we're going to extend this leg B. Isn't that amazing? Now, I didn't get a chance in the other hour because I thought, well, I did get a chance, but I didn't want to do it because it's just, I just don't see any reason why to complicate things. But in this hour, I can complicate things. And what I'm going to say is that within this chart formation, there are a bunch of things that I could talk about. We did a lot of that in my Master Trader series because it takes very detailed work and very specific price points to look at. I'm going to just do it rather than, I don't have, this is not the appropriate place or time to do it. I'm just going to say to you, there's something that's really important. The stochastics at 97% in the Dow. The MACD is still climbing. It means you can get a choppy series of price movements with a bias towards the upside until we get to that peak D. But it also says that 9-period moving average of 14,245. Yeah, it's important. But you know what? The price hasn't even come close to it. So there are other levels that you can look at. You can look at Friday's 14,329 level, as I would call that the very first area of support, with somewhere around the 14,320s to 14,300. That to me is the very first. Go one step at a time. I mean, I could extrapolate all this and say, oh my God, we're going down to the bottom trend line. Why even think about that right now? This is still a very important bull phase. Now, I'm going to talk about one thing real quickly, and that is the mentality of the buy mode. The buy mode, this is the whole reason why I've talked about the stalk leg, is it isn't just a physical pattern, it isn't just an optic, it is a mentic, it is a mentality. It is a mantra that comes into the public and to money managers that say, oh my God, I've missed everything. I've been sitting out like a fool. All I had to do was buy. I could have bought the diamonds. I could have bought the SPY and just sat back and said, ho hum. And this is the frustrating period, and they're going to try to grab stocks. They're also going to try to grab low-price stocks to try to make up. And my belief is that, no, this is a time to be very careful. I would rather, because I'm expecting that when we get a peak in the weekly chart coming up later in April, it could be May, I'm not sure yet, that's where we're going to get a really deep decline. And it's going to say, oh, those people that just got in are going to turn around and say, oh, no, I finally got in, and now the market's going down. Okay, I'm going to set that aside. I might bring it up occasionally every other day or so, but that's my thinking right now. I could be wrong, but it's my thinking. The thinking and the doing are sometimes separate. At this particular time, they are together. I'm doing what I'm saying in terms of what we want and what we're buying, what we're trying to own, etc. So I'm going to go to our first caller, and that is Mike in Long Island. Hi, Mike. How are you?
Good. How are you doing?
Very well, thank you.
Okay. Can we look at Interoil, IOC?
Now I do remember. Interoil is the one. Is this a Canadian company? Do you know?
They're looking for oil in Papua New Guinea.
New Guinea, okay. Because I believe that this is the stock. So I don't want to talk out of turn, but there was one of the oils. I thought it was Interoil.
Yeah,
but it had hysterical price moves at one point some years ago, and the rumor was that there was some extant rumor that kept saying that this was a fake company. And I kept looking at the chart, and I thought, I don't know about a fake company. They might be right about a fake company, but boy, the price says it's certainly moving high, and that's what it did. And it kept on making these peaks. A, B, I think that's a B as well. Then C, D, E, F at the top, and then it has a sudden single three legs to the upside, fails at the double top, comes in. It's had extraordinary percentage moves, and it's just done exactly the same thing. So, folks, I'm going to take the break. I'm going to catch up with the notation on my charts on this one. IOC, Interoil, trading at 76.98, down 70 cents. And I will give my assessment to Mike. I'm not even going to ask him what he's doing with it. I'm just going to have a look and try to be as objective as possible. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon at 877-927-6648, the same number that Mike from Long Island called in on IOC. So Mike, I'm going to give you my assessment, and then I'm going to ask you what your position is. The monthly chart says that the wick, that crazy peak D wick, was that a parallel wave count? Oh, almost a parallel. Yeah, right at 99.05, the high on, it was September 2012, pulls back to a doji reversal candle on the 31st. No, it was in December of 2012. I'm calling this a retracement leg gray A, because why? Yeah, it's a great candle, it looks very good, but it's still only retracing back to the highs. And the high was 99, I think I said 99.02. I'm just going to type in 99.02 so I know it's somewhere around there. 02. Okay. Now look at this. The weekly chart has a different perspective. It says, wait a minute, I'm being very methodical here. I took a very serious peak F high back at, it was at the same price, yeah, 99.05, not 02, but 99.05. I better type that in correctly. 99.05. And I took a little bit of a turn down, and I went to 50.95, 50.90 in the week of December the 7th of 2012. So this is a retracement, 50.90. And this is a retracement in leg C up. If this week there's a higher high above 78.30, and it's trading at 77.25, for a stock like this, 3 points is nothing. As you know, I don't have to tell you that the way it moves. That should make it should extend leg C. But how is it going to do that? Because the 9-period moving average is fantastic. The MACD is expanding. It's lower than it was up at the top, but it's expanding. That's very good. The histogram, the vertical lines, expanding. The slow stochastics at 82%. Excellent. So now we go to the daily chart. Well, the daily chart has a left side, right side price time match, and that goes to from the high of the ugly candle of the 16th of October with a high of 79.87 to a low of 70.02. Well, 79 is the target on this, and it should make it by the 14th. That's within 11, 12, 13, 14. By Thursday or Friday, on one condition, that either today or tomorrow it takes out 78.30. It doesn't even have to close above it. If it just takes it out momentarily, that'll say to me, I don't think that's a leg F in the old buy mode. I think this is a brand new buy mode, and it's going higher based on the stochastic at 91% in the daily chart. MACD good, not as good as it was at a lower high. So I've got to watch that. But so far, I like it very much. Would I buy it here? I don't think I'd buy it for the potential to make to hit that 79.87 level where there's tremendously strong resistance. But if it gets there, if it gets to 79 in leg B, then you've got C and D to go, and that's very positive. That will really help the weekly chart. Now, what if I'm wrong? Because I'm looking at it positively. I'd be wrong if there was a breakdown, and at any point in the next 2 days, instead of being up above today's high of 77.61, if instead of going to 77.70, say 75, it turns around by the end of the day or tomorrow and it takes out the low of yesterday or Friday at 74.59, then I have to say, on the shorter term basis, the upside might be limited. I still see it going there, but it might get very choppy. So the most important thing is that it needs to hold the gains that it's got. I would not be surprised by the end of the day if we've just snuck above to give leg D up in the 120-minute Dow leg. So continue in the daily chart. Just to what would that be? I can't remember now. I've been doing it all day. I just better say what it is because it seems to be moving with the market. That's why I wanted to bring the S&P and the Dow. Yeah, that would be leg C if it continues today. But if this is peak C in the daily of the Dow, and that gives me just leg D and options expiration, that says, yep, there could be a real choppy period. When I get to leg D, I would not be surprised to see a deeper pullback. That's why I'm saying IOC, which is Interoil Corporation, it's acting really well. It's had just beautiful candles since it took off on the 4th of March. These are just great candles to new recovery highs. I like it. So we're about to go to a break. I'm going to ask you when we get back in the break what you're doing, because I'd like people to be able to look at this chart kind of the way I have, do their own assessment. But I'll be right back with Mike in Long Island, and I'm going to ask him what he's doing with this particular stock. And then I'm going to go to the question that I had in the den. If I would look at what was the stock I looked at? If I would look at, I'll find it. I'll be back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. We've got Mike on the line, and we'll be going to look at, for Read in the Den, we're going to look at, I just typed it in. Of course, I've done so many charts, I don't even remember what it is. Cause. He wanted to look at cause. So I'm going to ask Mike. Mike, what is your position?
I don't have a position in this. If you look at that wick at the high.
This is the monthly or the weekly?
Yeah, 99. On the daily,
Yeah.
you can even on the daily you can see it.
Okay.
At 99. Does that eventually get filled in? That candle?
Well, that's a really good question. I was going to deal with that, but I thought I won't deal with it right now because it needs, first of all, to prove itself in the daily, but I'll talk about it. The wick that we see, folks, this is, let me just pull this up. I'm going to use the weekly chart because it's a little clearer in the technique that I use. The wick of 99.05 high, the week of the 14th of September in IOC, is a technique that I developed over a number of years. I call it the ChapmanWave Roman candle. This is an inverted Roman candle. And what we've seen with the inverted Roman candle, there's another one right there on the week of the 10th of February, is that because it is not red, in other words, it's not a negative one, it bounced back again, the inverted ones are a little bit more difficult to fill. The rules are exactly the same, except you have to remember, What chart were we looking at? Oh, we were looking at a chart. I don't want to go into it right now because I don't want to get deviated. But there was a chart that on Friday developed a Roman candle after pulling back a little bit. And what I'd said during my workshop on seminar on Saturday is that this positive Roman candle, this candle becomes really positive if there's a close above the high, and it occurs for 2 out of 3 sessions. So using that philosophy, it's weak if there's a close below the low. In this case, in the February case, it was 66.69, and lo and behold, it closed there once. The next week was above, and the following week was below. Third week, it started its big downtrend. We've done the same thing here. The low of, whoops, let me get rid of this line. That was a mistake. I'm going to keep that line. The low of 76.82 on the 14th of September. The next week, it popped up. The next week, it closed just a fraction above it. So that's 2 out of 3 weeks. That should have been positive, except that the candle that was formed on the week of the 28th of February is exactly the candle I was talking about. It's called the Roman candle. And if it's a Roman candle, if you trade into halfway of the wick and you hold there, there's a really good chance you're going to not only take out the low but break below it. And that's exactly what it did. And it started turning the 9-period moving average into a resistance line. Now we're above it. So everything about this chart says, and now I'm going to answer your question. And the reason I didn't want to do it right away is it's kind of far away. It's like when people say, oh, if you use Fibonacci extension, you can go from 23 to 85. I've heard, there's one particular person on CNBC who often does that, and I say, wow, what happened to all the resistance? So I have to go and look at resistance, and the resistance is that if the price goes above 81.50, which 4 points, it shouldn't be such a big deal for a stock that very often trades even intraday $2-3 at a time, if not $4. So that's the area I'd be looking at. If it can close in there, then all of a sudden the inverted Roman candle of the 21st. That's the same rule. If it can close above that for 2 out of 3 weeks, then we're looking at the wick of that candle, which would be at 87.66. If that works out over the next 3 to 5 weeks, you'd be looking at this huge wick. And that wick says of the candle of the 21st of September, if the price goes to 91.30 at any point, this is a really good chance it's going to test the old 99.05 high, and it can even go higher. But, we're at 77. Do I want to talk about 20 points, 28, 30%? I just don't do that. I do say it's positive for now, but these are the aspects that we got to look at. And the monthly chart is the one that says to me, it's going to kind of be tough to do, except this is the one stock that really does it in a very short time span. It can go from a previous high to a low and back to the high, and then it can go from the previous high to the low and back to. So this thing really whips around. So right. I would use that volatility right now to say that right now it's looking quite good. The pullback that I'm anticipating either later today or tomorrow for our peak confirmation will be in the daily, should be kind of quick and sharp, but not as deep as the one coming a little later on. It might be later in the week. I don't know how. We just, we got to go day by day. And that's where you're going to see if this trading range of 77, 76, which is really important, 9-period moving average support, if that breaks, watch the stochastic. If it's still holding beautifully at about 89%, it's saying, hey, don't mess with me. I'm going high. I want to go to that 80 level, that left side, right side price time match. And the daily, it turns out to be the 14th. That might be a little optimistic, but that's kind of how I'm looking at it. I hope that helps you.
Yeah, thank you for helping me. Yeah.
My pleasure. So, we've got another caller. We've got Sol in Dade City, Florida. Hi, Sol. How are you?
Hi. Hi, Basil. How are you?
I'm very well. You wanted to look at?
Yeah, dry ships.
Yes. Do you have a position?
Not right now, but I did take a nice profit.
Okay, so folks, we're looking at DRYS. It's trading at 204. It's dry ships. It's one of those dry bulk carriers. it has spectacular moves, sudden move up to 244, and just as spectacular, it comes down to 178. I mean, percentage-wise, you got to think of this as a stock that you bought at 24.5, which suddenly within 2 weeks goes down to 19.20. That's kind of that's a bit of a drop. So I like, and the aspect that I was just talking to Mike about, I don't know if you're looking at your charts, but if you're looking at the chart with the price of the 6th of March, where it had 20, it opens at 199, goes to 210, goes to 197 low, and then closes at 198. That candle says that we are just right at this very moment. I'll give it another penny or so, 210. If it can get to 211, it will have filled a bunch of the wick, and that says there's a real good chance it's going to test the high of 210 and maybe even the 212 area. If we can if Dries gets back to 214, there's a real good chance $2.22, the 200 period moving average, will be the target. I don't know about this as a longer term position, and we've still got to get some pullbacks this week that I'm expecting, but I'm going to make a suggestion. I'm sorry, what?
You think it's going to pull back?
Well, I think it's done most of the pullback. This is what I'm going to suggest. You're looking to go long, right?
Yeah. Mm-hmm.
Well, I'm going to make a suggestion that a very small part of the position you would have put on right now, you actually start at $2.04, realizing that at this point it appears that the $1.97 to $2.10 level is like I'll call it a magnet, that if I'm wrong, it could pull back. It could even retest the 180 level. I don't think it's going below 179, but let's say it pulls back. I'm pretty sure, I can't guarantee, but I'm pretty sure you'll be able to get back out at 204 if you get nervous at all. So that's why I'm saying a starter position as we're speaking at 204, realizing that there might be a market, I won't call it a correction yet, but some kind of a pullback coming within the next 3-5 days or something like that. And it could be quite a bit of a pullback, but a pullback nevertheless. And that I would just start a smaller position than you would initially have thought of doing. The reason why I say smaller is I want to see the trend change. I need to know that sharp move that it had in the weekly chart, 2 weeks, 3 weeks down sharply, or 2 weeks down sharply, and then trying to make its way back and having a tough time. Same inverted Roman candle that I was talking about with Mike happened last week with this stock. Not quite the Roman candle. I prefer just a tiny wick at the top. In this case, it would be the bottom. But the MACD is improving in the stochastic. The MACD in the daily and the stochastic's improving above 35%. I quite like it, so I'm going to suggest start a little position now. And the only reason why I say start a little position is if you get in now, there's a chance that if it just touches 210, it could pull back one more time, back to about $2.04 to $2. And if the stochastic and MACD are still acting strong, that's why I would say to you, okay, now you might want to think of adding just a little bit more. I would not be heavy. It would be a part of my portfolio, but a small position. And the reason I'm saying that is that this was somewhat the leader right in the very beginning of the move up. And I suspect money will flow into this because it's kind of a sexy stock. It had a spectacular move to 131 once upon a time. And just for that reason alone, I think that there's some buying pressure. So a little nibble now. You might have to wait. You can call me, say, Wednesday, and let's look at it again.
What's it at now?
If you're able to. But my suspicion is just start. What's it?
Yeah, no.
What's your question?
What's the trading at right now?
$2.03.
203.
See, so it's made a new recovery high from Friday.
Yeah.
And it's come off the double bottom low. I kind of like the pattern that's forming now.
That's what I like.
Yeah, I like it. So I don't know what your whole portfolio is. I'm just saying, don't get carried away. A position that you feel you could add to. The reason why I say that, if in March, the week of March, let's say whatever it is in 3 weeks' time, 2.5 weeks' time, if it's not come back at all towards the 193 level, but it's trading at about 218 to 230, somewhere around there, just a nice stair-step recovery, then I'll be able to say to you, wow, it's acting well. The stochastic hopefully is up instead of 45% in the weekly. It's near 80%, and the MACD is still very strong. Then you've got a stock that you can add to. At this point, it's way more risky to get a big position because I would rather have you leveraging in on strength than trying to scale out on weakness and saying, oh, my goodness, that was wrong. So
what did that earnings report say recently?
I don't know. It's a good question. You know what? I think it's important that while you ask me the question, I'm going to go for this is Dry Ships. Is it called Dry Ships? Dry Ships Inc. Inc. Earnings. Oh, I should have tapped in earnings. Dry Ships Inc. Earnings. Earnings. It's a good point because we March the 7th. No, wrong. It was added to
6th, I think.
29th of May. Next earnings day, 29th of May. Plenty of time.
Yeah.
So, yeah, I feel very comfortable with that recommendation, saying nibble on it now. You might want to add to it in a position. You might say I'm going to more than nibble, but it's your position. I don't know your portfolio. I'm just saying I would start a position now with the intention that if it acts well, I would rather add on strength because that weekly chart, it has this way of spiraling up and then coming down. And the weekly chart says there's a lot of work to get halfway into the candle. The candle's back in March, and that would say 230 is really when it really starts to pick up strength. So I hope that helps you.
Yeah, okay. Thank you.
And as I said, I think right now, for my eye, the downside is the 185. I don't know if it'll touch 175, but 190 to 185 is probably going to find strength. Hope that helps you.
Okay, thanks a lot.
Thank you very much, Saul. Saul in Dade County, Dade City, Florida. I appreciate the call. We're going to go back now because the question was on cores. And it's been a spectacular winner. Folks, you know, some of these apparel companies just had huge gains. Well, in leg C in the monthly chart, it's gone from the IPO price of a low of $25.50 to last month's high of round number 60. Was it still 60? No, it went to 65.10. Wow, I hadn't caught up there. 65.10. And the monthly chart says it should go to a new high. It should go to leg D, but it says I'm a little tired. I've had a spectacular move so far. The weekly chart has got G/C, and I'm going for G right now. After the peak F top, there's a big cup formation. It went to peak. Oh, wait a minute. What am I talking about? G. This is C to D. It made a peak D. That's what you want in the ChapmanWave. And the stochastic, if this week it closes, if the MACD closes negative, I get a down arrow for that peak D. Now let me just go to the weekly, the daily chart. The daily chart, the question was, is there a left side, right side price time match? And I'm going to say, so far, yes. And what it says is that it's at 55.51. And the market's acting quite well. If this is acting poorly, it's saying, hey, there's a potential. Look, there's a potential shoulder, left side shoulder. Right side, the head is at 65.10, peak G. And here we go to the right shoulder. If that will fail, it fails at 52.22. I'm not going to do that. I'm going to say I have a target for it that by the 19th or 20th, it should be testing 52.22 if it keeps acting like this. I'll be right back. Basil Chapman, Tiger Technicians Hour. We'll be back with Ken and Neil straight after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and just as we're going to go to our next call, so I had an email question was Oracle Squash Daily. I like squashes from the bottom. That's the stochastic and the MACD pushing together like that. This one is positive, but an Oracle, but there's huge resistance at the last high in Oracle, and it might take a little time before it can do that. I suspect it's going to make a cup and handle formation. So the answer to that is yes, it is a squash, but they work from lows, not kind of from highs. So we're going to see if that one works. And the weekly has that flag pattern, the falling axe pattern. So if it breaks to a new high, that will be positive for Oracle. It's acting very well. I'm not arguing. I'm just saying I usually use it at the bottom. So let's go to our next caller. We've got Ken in Almonte Springs, Florida. Hi, Ken. How are you?
I'm doing okay, Basil. How you doing?
I'm doing well, thank you.
Hey, you just had a caller call in about the company Dry Ships.
And you've got, but you're talking about the real winner, which is?
Diana Shipping. That's a much better fundamentals and technicals.
Absolutely. I think you're absolutely right. And I'm going to just mention to our caller, Saul from Dade City, I still think that the analysis that I gave for dries is exactly right. I was going to punch up some of the others, but I thought I'm going to deal with this one first. Thanks so much for calling. And folks, we're looking at DSX, which is Diana Shipping. It's trading at 925. Everything about the chart says, yes, we're getting to a kind of a little bit of a resistance area here, both in the daily, which is in peak C, and it could go a little higher, and the weekly is in leg D. But the monthly says, hey, this is the first time that I'm showing strength, continuing strength for the third month in a row in the monthly by going over the 9 EMA. I think you're absolutely correct. I would call this, at least, I want to just look at NAT, which has been just horrible. Oops, let me type that in over here. NAT, just real quickly. Do you have DSX?
At $9, I do.
Excellent. Okay, I think that's good. There could be a little bit of a choppiness coming up, but at this particular point, I think you're right. This is like the best one that I'm looking at this particular. Folks, DSX is a superior stock. It's more expensive. But I think it is more expensive. I can't remember anymore. I did all that price work and now I can't remember. Yeah, it is. And so DSX is in leg C in the daily. I like it very much. You're absolutely right, Ken. Great eye, and congratulations at 923. You're in at the right price. But there could be some choppiness over the weekly chart. But the main thing is that the support at 869, 880 to 869 should be very strong for DSX. Hey, congratulations. Thanks so much for bringing it to my attention.
All right, thank you.
Thank you. So that's Ken in Almonte Springs looking at DSX as a leader in the dry ships. Is trading at 923. Let's go to Neil in Denver. Hi, Neil. How are you?
I'm good, Basil. Thanks for taking the call.
My pleasure.
I've got a question. It seems recently that we've seen some stork leg patterns end up in a beak formation and then form a falling axe pattern from there, and the market have a quick move back up. If you concur with that, I wondered if you look at Goldman and think, at least tell me if you believe that we could be in that falling axe pattern.
Are you able to look at the charts right now?
I'm looking at them right now, yeah.
Okay, that's pretty much exactly what I've drawn. Hey, good eye. But there's something else that happens with the falling axe formation. And that is you've got to watch the previous high, because if that becomes the real... This is what I went through on Saturday. I was discussing it. The falling axe... Folks, the leg, you can see Goldman Sachs trading at 153.52, up 52 cents. Huge... and 52 cents, up 55 cents. You can see there's a huge leg, then there's the body, and then it broke out and it went to the neck and the head and a pullback to the body. That's really what you have to do. And then there's always a bounce. Not always. There's usually a bounce after that whole formation is finished. Then you're on your own once the bounce is complete. So I like Goldman Sachs. I think it's in a choppy range. It's already done a 1-to-1 to the upside. Goldman has to break the 159 round number high decisively, and at that point it's now in completely brand new territory, and the weekly is in legs peak C with a doge. You know what, I'm going to spend a little more time on it tomorrow if you don't mind. So good eye, absolutely correct in your analysis, and I'll be back tomorrow. We'll go on with it. Thanks for being here, folks. Stay tuned for Larry.